Alright, so good day guys, good morning, good afternoon, good evening. It depends on when you are watching this video. So it's your boy Prosper here, and in this video I am going to be talking about the range map strategy, TRM. The range map is a model that deals with range, sweep, and price reactions. Reactions. That's the framework. Range is sweep, liquidity sweep, and price reactions. That's just the three things we are going to be dealing with. Now I'm going to break down each and every one of these things, but let's start with the range for now. We all know what a range is. We all know what a range is in the market, and reasons we use range in trading. We use range to determine what the premium and discount zone in the market. The premium zone is where you sell from, is the zone you sell from, and the discount zone is the zone you buy from. Yes, and ranges also help you towards identify your strong lows and your strong high, your swing high and your swing low. So ranges also help you towards. Please, I would like you to get a pen and a paper, because I am going to be talking more about some theoretical aspects, and I am not writing it down for you to see. So as I'm talking, you should be jotting down, and whenever you go to study another time with this video, you should have a note with you. You understand? As I have my own notes. That's for trading. You understand? I jot things down, so you should get your own notes too. That's another part of journaling. If you get your own notes that you used to study. So as I was saying, I said ranges help you towards identify your strong highs and your strong lows. That's three things, or should I say two things now, that I should say about range. The first one, I will come again. We are writing, I said it's used to determine our premium and discount zone. 1. 2, it helps you towards identify your strong high and your strong low. 2. Then number 3 is that a range also helps you to identify liquidity points. Now that's where the sweep comes in, but let's leave the sweep for now. Sweep and price reaction for now. Let's talk more about the range. So range also helps you to identify liquidity points. That's where our internal range liquidity comes in. That's where our external range liquidity comes in. Yes, a range is always valid because of the presence of liquidity. You should also write that down. A range, how to know a valid range, is because of the presence of liquidity, either the internal range liquidity or the external range liquidity. Once these two are present and it's coming from a swing high or a swing low, then you know that this your range is valid. Alright, so moving on, write this down. So you should also know that marking your range, you want to use your last low, the last low that sweep liquidity and break structure. That's how you mark your range, especially your new range. The last low that sweep liquidity and and break structure. That's how you use to mark your low. It's not just about extreme low and extreme high. I'm going to show you something now. It's not just about this. It's not just about this. This is how to mark. This is GBP JPY on the monthly time frame. Okay, we know that this year is our swing high, and this year is where's our swing low, and this here is our swing low. We have our swing low right here. You understand? But how do you want to start marking your new range? How do you want to start marking your new range? We see you want to use the last low that swept liquidity and break structure. You understand? When we have this now, we have price reacting from here, from this zone. This is a monthly time frame, by the way. We have this. The price did sweep liquidity and do what happened here, and price also what break structure here. This is a range. Now this is what is this here now, from this swing low now, from this swing low here to this swing high here, to this swing high here is now called what? Our new range. You understand? It's now called our new range. This is our structural range before. This was our range between this swing high and what? And this swing low here. But what the price do when price okay, let me do this. Let me use this inside. Yes. So this is our PDRA, our supports and our discount zone. So price is at our swing low right here, right? Is in our discount zone. What do? We buy. And what the price do? Immediately it got to the premium zone. It sell. It was sweep liquidity. It give us a sweep of liquidity and a break of structure. This is how to identify our new our new range, our recent range. This is now called what? Recent range. This is now called what? Your recent range from year to year. So this is now the new range I want to be working with when I'm trading in the market. This I want to start working with what? This premium and this discount zone. Instead of this, I am not waiting for price to get to this point. I want to start working here. Mainly prices at this point, I'll be anticipating for what? For sales. I mean, immediately price get to this point, I'll be anticipating for what? For buys. Okay, now let me give you the diagrammatical expression. Let me do this. Let me do this. Okay. Let me do this. Let's say this is a what? A higher time frame. Sorry. This is the higher time frame zone. The higher time frame demand zone. And following price reactions, following our structure, we have correction, impulse move, break of structure, a correction move, impulse moves, break of structure, a correction move, impulse move, break of structure into what? Into our higher time frame what? Higher time frame demand zone. Then we have price doing what? Breaking structure to what? To the upside. You understand? We have price what? Breaking structure to the upside. Now mind you, all these zones now, what is making price to here? Give this pullback and sell, give this pullback and sell. What's pushing price are what? Supply zones, right? Supply zones. That's what's pushing price down. You understand? So when price get to this our higher time frame demand, it pushes price, it swept liquidity here. Swept liquidity here. Swept liquidity here, and what? Oh my god. What am I doing? And what? Give us a what? A break of structure to the upside. You understand? So what do you know? What happened here now? Price will cleanse, swept out all these liquidity points and go towards our another supply zone right here. Then this still happen again. Then let's see price broke structure. Price broke this supply zone and give us this break of structure here, give us a sweep and another break here. Now this is how to identify your range. When we have this sweep, we want to see what the last low that swept liquidity and give us a break of what? A structure. So now this here now, let me from this point to this point becomes our swing low and our swing high. I wish I can write. Yes, I think I can. From this point here now becomes our swing low. And this point here becomes our swing high. This here becomes our swing high. I'm going to try and be fast so this video will not be too long. So, like as I was saying, okay, where was I? We've got our range now, isn't it? This is now what? Sorry, this is the 2 here. We've gotten our range now. This is now our range. This is now our range. Now I am going to give you the checklists you want to use to frame your bias, identify your range and enter your trade. Because in this video I want to try and put everything together and send it to you. Then you watch and start asking your questions, and more videos that I will be doing will be based on your questions and any other thing that I see and feel I should give out. You understand? Now this is how we have identify our range. Now we'll be working with this premium and discount zone. When price is at this premium zone, we want to sell. When price is at this discount zone, we want to do what? We want to buy. I don't know if you get the points now. I don't know if you get my points now. So that's how it is. So what we want to do when price broke this low, I mean this high here, this supply zone here, what happens? It becomes what? Supply failed. And when supply fails, what do we have? We have a demand zone. The last low also that broke the supply is what? Your demand. Always know that the last low that broke the supply is your demand. This here is your demand. This is low that broke this is your demand. This is also a demand. This is also, you understand? These are demand zones. You understand now? So anyways, we are what now? We are in the premium zone. So now let's see price do this. Since we want to sell, we go into the lower time frame, we get our confirmation, we start to sell from here. Now you start seeing price doing this. Now price will come now, and mind you, some people want to sell from here. You cannot sell from this demand zone. Why can't you sell from this demand zone? Why can't you sell? One, it is in our premium zone. Then two, liquidity has not been taken out yet. You understand? Liquidity has not been taken out yet. So this here now signifies our internal range liquidity that will be swept. Then price will now what? Come to our what? our demand zone and give us a break. Now let me draw this well. Liquidity being swept. This is our what? This is our IRL. This is our internal range liquidity being taken out. This is our IRL, our internal range liquidity being taken out. Yes, you understand? This is our internal range liquidity being taken out. Then price do what? We have our sweep. And what? Our break of structure. So what do we see? The last low that give us the sweep and break of structure is what? Is our range what? Our range low. So therefore, this we now have a recent low. This is now our recent low. This is now our recent range. Sorry, we now have another range term to work with, because price is now what? Reacting from this demand zone. Now price give us a sweep here and what? Give us a break of structure. Let me draw this way. This is ought to look like. Don't mind my drawing, please. Don't mind my drawing. Just try to understand where I'm coming from. So now price give us what? We have our sweep and we have our break of structure, our BOS. So now this is now a low. So the last low that give us, the last high that give us the sweep and the break of structure is called what? Our recent range. Now, why am I not working with this? Some people will not want to buy here. They will say, oh, they will wait for price to come deep into the discount zone. No, price is already at the discount zone, reacting from a higher time frame demand after sweeping internal range liquidity. You understand? So next is to now what? Is to now work with this. As price is in my, let me turn this around so you understand it well. So as price is in my what? My demand zone here, I will be looking for buys. But immediately price gets to where? Gets to the discount zone, I'll be anticipating for sales or holding my buys. You understand? So as price, let me clean this. But mind you, after take note of this, after sweeping internal range liquidity and reacting from a zone, where are we targeting? Your target should always be what? Your external range liquidity, isn't it? Because this is what price is doing. We're in an uptrend, right? Let's say we're in an uptrend. This is what price is doing. Break of structure, pull back on our break of structure. This is what we are expecting. You understand? Let me shift this. So this is what we are expecting. We're expecting for price to now what? Take out our what? External range liquidity, ERL, external range liquidity. Sorry. You get it? So this is what once you get you go into your lower time frame. Now you get your entry. You are targeting your what? You want price to target your external range liquidity. That is your target, but doesn't mean that is where your take profit should be, because mind you, there are zones here in the premium zone that price is likely to what? To react. Do you understand it now? Okay, so now moving forward, price come give us react to another demand here. React to a demand here, give us another break of structure. React to a demand here, give us another break of structure. We have a break here. We have price reacting to our demand here. This is how you want. This is how you want to get your. This is how you want to get your confirmation entry after price reacting to the. After price reacting to this higher time frame demand, you want to see your break, your first break of structure, your sweep and your first break. You understand? You want to get your sweep and your first break, then you come down here and you are ready to go. You are what? You are ready to go. This should be your target. So, but then let's now say price do something like this. When price come to this point now, maybe price take out this liquidity here. Maybe price take out this liquidity here, react from a higher time frame zone again, and give us another sweep and break. Where will you now be targeting now? Where will you be targeting? Let's say price do this, you know you are in your, once you could give your sweep and break already, you should have up out of this trade already. You should not even be in this trade because it has given you a sweep and break. You know that price is coming, is in our discount zone. Now where this trade is very strong is that in our recent reach is in our premium zone. In our swing, in our structural range, is still in the premium zone. You understand? So what you want to do here now is have your lower time frame confirmation and sell. Then the only time this now here, this here now becomes our new range. This here now becomes our new range. You understand it? This here now becomes our new range. The only time I now want to work with this structural range is when price now was break, give us a break of structure here. When the demand fail, when this demand fail now, we have our target here and it hits and it did not react. It did not what? Price did not what? Price did not reverse from here, but instead price do what? Give us a break. And when demand fail, what happen? When demand fail, supply comes in. Now this is where you want to target your what? Your swing low. You understand? This is when you want to target your swing low and work with what? Our normal structural range. Because now you are now what in your this becomes what your you understand where I'm going. You have price sweeping liquidity here after breaking structure. Then obviously supply comes in, or you can use maybe this. You get it? It's very, very simple. Mind you, you should always work with lower time frame confirmations. You should not just see price at a higher time frame zone and decide to buy. If you go aggressive, sometimes it might work out, but sometimes it might not work out. So we have this. So this is the only time I want to target this demand zone down there. Now I'm working with my what? My range, my structural range, my previous range. And now in the what? This zone here. You understand? Price can still come from here. Respect this zone again and what? And go bullish and take all these highs here as liquidity here and break our normal structure, because this is our structural range. You get it now? This is now where this diagram comes out. We still have this. This is what price just did. Price just came, took out some liquidity, going to an old low and an old zone, and what? Come out again. So we are still bullish. But the only time I will not be in a bearish, our structural range will not be bearish. The only time our structural range will not be bearish is when price now break our structural swing low. Oh my god. When price now break our structural swing low, this is now what? We now have a bearish move. I'll now be looking for more sales to the downside. I don't know if you understand what I I don't know how many minutes this would have been, but that is the. So I want to give you a checklist that you use to watch. You need to see, and as a trader, you are supposed to have a checklist. Things that you must mark and say, oh, you must see these things in the market before taking a trade. If you don't see these things, you are not taking a trade. These are things you should follow. These are things I follow. First of all, is to identify my range using my premium and my discount zone, swing lows and swing high. I just taught you how to identify a range. A range, new range, recent range, structural range. I just taught you how to identify that. So I can't write the checklist down here, but I'm going to write it down and send it to the group. I'm going to write it down and send it to the group. So I'm going to call it out now. Number one thing you want to identify is when taking your trade is you want to have your range. You want to identify your range. That's one. Identify your range, your premium and your discount zone first. That's one. Then number two, you identify your liquidity points, your liquidity point, your internal range liquidity and your external range liquidity. You understand? Number three thing you want to see is a sweep from the higher time frame or price rejection. Now let me go into another example. Now I've talked about I told you that we have three framework in the range map. We have the range, the sweep, and price reactions. That's the three framework. We've talked about the range. Now we're talking about the sweep. Now this is, let's say we have this, talking about the sweep now. Let's say we have this. Okay, let me separate this. Let me separate this. Here we talk about first is your range. Now we want to talk about our sweep, range, sweep, and price reactions. So now we want to talk about our sweep. So literally in this video, I am giving you how to frame your bias and how to get your trade, everything in one. I'm still going to make more videos about lower time frame entries. I might do it here, but let's see how time goes. So now let's say we have this higher time frame zone also, right? I want to use a key level. I want to use a buy side liquidity. Just know that there are key zones that initiate price movements. You understand? There are key zones that initiate price movements. Now, what are these key zones? We have the key level, we have the higher time frame, demand or supply. You understand? Now, we also have the 50. Please write this down. We also have the 50% of our fair value gap. So now let's say we have price coming into a demand zone in the higher time frame. After you've identified your range, now you want to see your daily time frame sweep. So after you get your let me just do this. Let me just do this. We want to get your sweep from the daily time frame. So you want to get your sweep from the daily time frame. This is called what? A DCL, a daily time frame liquidity. This is another checklist I work with. Mind you, I'm giving you checklists I used to frame a directional bias and enter a trade. So first one, I'm going to go again. As I'm writing, I'm going. First thing you want to see is what? Is identify your range. One, using your PDRs, your premium and your discount zone. Second thing you want to see is your identifying your internal range liquidity and external range liquidity. Third thing you want to see now is this: price reacting from your higher time frame key zone. Now your higher time frame key zone can either be your buy side liquidity, sell side liquidity, key level, or supply on demand. Now once you have this, we have your daily candle liquidity. The next thing you want to see is your what? Price giving us you want to see is your daily time frame, daily candle liquidity. Daily candle liquidity. You make sure that price is your premium or your discount zone. When price, you've identified your range and price are your premium or your discount zone, you look for what? Your daily candle liquidity or daily candle rejection from that zone. Now after the daily candle has given you a liquidity or a rejection for that zone, you want to move down to your 4-hour time frame and look for your 4-hour time frame breakout. This is how you see. You want to see something like this. Your 4-hour time frame. Your 4-hour time frame Your 4-hour time frame breakouts. And you can identify this 4-hour time frame breakout using your line chart. I'm going to show you that in the chart. Now you want to see this in the right here. We have this as our let me see, D1 daily time frame. We have this as we have these as 4-hour. Let me see, H4 stroke H2 breakouts. You understand? You get it now. First you want to see is your daily time frame liquidity or your daily time frame rejection from your higher time frame key zone. Then your 4-hour time frame or your 2-hour time frame breakout. Then the next thing you want to see now, after you've identified your daily candle liquidity or then you move to the 4-hour time frame or your 2-hour time frame, you identify your breakouts. Then the next thing is your lower time frame market structure shift or change of character. This is it. We have this. Then we want to see this market structure shift and change of character in the This is how to get a lower time frame confirmation. You have your 30 or 15 minutes So here you have your 30 or 15 minutes market structure shift. It's as simple as that. these are the checklists. I'm going to write it down, but for now I'll be calling it up. One, you want to watch the checklist for the range map model. One, identify your range using your PDRs. Two, identify your internal range liquidity and external range liquidity. Three, you look for your daily time frame candle rejections or daily time frame candle liquidity. The candle liquidity is very, very important. When you have your daily time frame give you a sweep, it's very, very important. But if you don't see that, your daily time frame rejection alone from a higher time frame zone can give you a 4-hour time frame breakout or a 2-hour time frame breakout. And when you have that breakout, you are good to go. You go into your lower time frame 30 minutes for your entry. When you have a market structure shift, you go for your entry. Why we are looking for a lower time frame market structure shift? Because let's say you are in a sell market, you're in a bearish market, and we're having this series of sales, price reacting to what, as I said, supply zones, then price hit, then now price now hits what, that zone, that higher time frame zone, give us that sweep. Price now give us that sweep, 4-hour time frame breakout. Now this is it. Price can give you a 4-hour time frame breakout, but if you don't have your market structure shift, if you don't have your market structure shift, you only have your 4-hour time frame breakout, price can do what? React. When in a bearish market, this market structure shift is now where the last framework comes in, which is price reaction. Price must give you a bullish intent. Price must tell you that I am ready to buy before you buy. I don't know if you get, because we're in a bearish market. Just because price is reacting from a higher time frame point, key zone, supply and demand zone, does not mean it is ready to buy. Is price giving you a bullish intent? No. But when you have your daily candle liquidity checked, you have your 4-hour time frame breakout or 2-hour time frame breakout checked, then you have this structural move checked too. It is giving you a bullish intent. Now the reason why I will not just want to get my 4-hour time frame breakout and say, oh, I am ready to sell. I am ready to sell. We now have this. So mind you, this is coming from where? It's coming from where? Our higher time frame zone, right? Normally, this is what people normally do. This is very, very much aggressive. Mind you, we are in a bearish market, right? We have what pushed market down was what? A supply, right? Was a supply, right? So this is what pushed market down, right? So price might want to come and just use here as what? As internal range liquidity. Give you a what? Give you a sweep here again. Then we have our what? It is very, very, very simple. The price can just come and take you out. But the best way to do all this now is when, let's say, we now have this, price will now come, take you out. But the best time to do all this, let me change this to red. Let me change this to red. But the best time we now have this is when price comes, take out this zone. Price now take out this what's it called? This supply zone. And when price take out the supply zone, demand zone comes in. Demand zone comes in. Then that is when we are now ready to buy. Are you getting me now? Are you getting this? You have to wait for what? You have to wait for price what? Price intents. You have to wait for price intents, for price to tell you that okay, I'm ready to buy. When a supply is taken, or yes, when a supply is taken, it is what being taken out by a demand. You understand? This is how I catch my trades. So I'm going to go over the process again, step by step. Number one, we do what? We identify our range using the premium and discount zone. Always learn how to identify your range. You don't need to be following up your structural range. Identify your recent range and identify your what? Your new range. That is one. Then two, we have our sweep, which is the daily candle liquidity, or rejection. Daily candle liquidity or rejection. The liquidity is always a high probability. When you see daily candle liquidity, it does know that price is going to target the previous daily high, so you tend to be bullish. You understand? But it is not yet confirmed. So you have your breakout, please, your H4 or H2 breakout, or then you have your 30 minutes market structure shifts. Then this year now is where our price. This year is now where our price reaction comes in. Price intent, price reaction, price what's reaction. You get it now? So these are the three words, these are the three frameworks. Please get your notes, write this down, so that when you study, it will be much more easier for you. You get it now? So these are the three framework of the range map. You identify your range, identify your liquidity points, and your price reactions. First of all, the range, your checklist. Your checklist now to enter a trade or frame your directional bias is to what? Identify your range using your premium or discount zone. Identify your liquidity points. 2. 3. Your daily candle liquidity or daily candle rejection. 4. Your high H4 H2 breakout. Then lastly, so we just have 5 checklists. Identify your range. 2. Identify your internal range liquidity. Please write it down. 3. Identify your daily candle rejection. Please, there must be a rejection from the higher time frame. Then 2. H4 H2 breakout. Then lastly, 15 minutes and 30 minutes market structure shifts. This 5 is your checklist. Then before you enter the trade, it should give you a notice. Always follow price reaction. It should give you a bullish intent. Don't say, oh, price is going to leave me. It's going. Price is not going to leave you. Don't be in a rush. It will only come back. Always come back for you. Now there will be more videos and more teaching, but I pray you just get this down. That's it for that. And that's it for that. So okay, I think let's so now let's have some chart examples. This is the daily time frame. Right here. We have our swing low. We have our swing. Fuck, what am I doing? We have right here. We have our swing low, and we have what? And we have our swing high. We have our swing low, we have our swing high. So now this is our PDRA. We want to know when price is in our premium and discount zone. Now we see, what did we do? What did price do here now? Price swept all these liquidity points. So what happened here? Internal range liquidity IRL was taken out. Then price what? React from this demand zone here, giving us a sweep here and also a break here, right? So this is now our recent range. Our recent range. This is where we want to work with. Now what happened here? Now we can see that price did what? Sold into our demand zone. Let's see, this is where we are. Prices at our demand. If you can see what happened here. Now this is, we have identified the range, right? We are working with our discount zone here now. Now this is our what? I say this is our internal. Well, this is our. So we have this. Now after this break of structure here, so after this break of structure here now, we have our internal range liquidity identified. Then this is the next zone in the daily time frame that we want to look out for. This is the next zone in the daily time frame that we want to look out for. Now what did price do here? This is our external range liquidity down here. Our external range liquidity. What did price do here? Price swept all these lows as liquidity, came into our discount zone and start to buy. Now that is that for the range and internal range liquidity. Now our second checklist before we now enter this trade. Now we can see that price is now following price reaction. Price is reacting from our higher time frame zone. Now this is the daily time frame, daily candle liquidity I was telling you about here. This is the daily candle liquidity I was telling you about here. Now what you want to do next is go to the lower time frame, 4 hours, to look for our breakouts. What do we use to look for our breakouts? We use our line charts. We use our line charts. So we have our sweep there. What do we want to use now to identify our breakout? We use our line charts. Use your line charts. Yes, now you can see that there was a breakout. You can see that there was a breakout here. So you can see that there was a breakout. If you move down to the 2 hour time frame, you still see the same thing. Move down to the 2 hour time frame, you still see the same thing. You still see the same thing. You still see the same thing. You see the same thing, right? You see our 2 hour time frame, our 2 hour frame. I cannot move to the 30 minutes or 15 minutes now to show you our entry. We will have every video later. But you can identify that after price give us that sweep, daily time frame sweep here. Let me use this as X. Daily time frame sweep here. After price give us that sweep, then we have our breakout. Then we have our this inclines that we have our 15 minute market structure shifts here in our 15 minutes. You can see that now. You can see that I don't want to go to 15 minutes because we will not be able to see this chart because it's a long time ago. It's around the close. We can see that now. So what the price do here? Price came down to what? To a demand here. And what? And then we put let's go back to our candle chart. and then we do what? And then we bought from there. You can see here that liquidity was taken out. You can see here that liquidity was taken out. Liquidity was taken out, and then we bought. It's as simple as that. You might want to target this high, you might want to target this high also. And you can see all the way through. If you hold this trade, and you can see all the way through, we have about 8 hours here. It's as simple as this. You get the point. So that's that for that, and we'll meet in the next class. Always make sure to have your notebook and jot things down. You understand? Always have your notebook and just jot things down, and always study using my own framework. Add to yours, and with time, with experience, you'll see how you'll be milking in the market. So let me do some small recaps. The normal framework for range map strategy is range, sweep, price reactions. Identify the range, anticipate the sweep, and follow what? Price reaction. The checklist: identify the range using your PD arrays. Identify the range using your PD arrays. 1. Identify your what? Internal range liquidity, your external range liquidity. 2. Your daily candle liquidity. 3. Your H4, H2 breakout. 4. Your 30 minutes, 15-minute market structure shift. It's as simple as that. So see you on the next video.